Okay, so should you pay cash for your car or should you finance your car? So for this video, I'm going to make this video and pretend I'm talking to my son. My son's only 4 months old, but I'm going to make the video and explain this exactly how I would to him, okay? And I'm assuming this will be accurate when it's time for him to get a car. I don't think the stuff I'm going to say in this video is going to really change very much. It could, right? But I really don't think it's going to change very much. This video might take a little bit. I might bounce around a little bit because it's a bit of a complicated thing. And to explain my reasoning, I have to explain more than just answering the question, like, should you pay cash or finance? Because when I explain this to him, there's more to explain than just cars. It's just about money in general. So listen, if you want right now, you can be my son. If you don't like the idea of that, how about I'm big bro? This is what I would tell my little bro if I had one, but I do not. So for this video, you could also be little bro. All right, let's begin. First things first. A lot of conventional wisdom is pretty bad. A lot of people take it as a sense of pride when they pay cash for a car. And I bought into that stuff. And I bought a car cash not long ago. And the crazy thing is that it just might be the worst financial decision that I've made in the past, like, 6-7 years. Isn't that crazy? And of course I'm going to explain why to you. Really what it comes down to is, right, like people telling you to pay cash for the car, they're telling you to save and everything. They're definitely well-intentioned. It's good to save. They're trying to help you get ahead. But I've read so many books just from my own experience of trying to get ahead financially in life. It's very hard. It's harder than ever. And I think it will only become more difficult. I think it just becomes more difficult over time. I think every generation has it harder than the last. And then the previous generation doesn't understand it as much. Wow, this person is actually going the speed limit. So people are well-intentioned, but I think, I don't know what it is. I think maybe they just aren't far enough along in life, and so they give you the wrong advice. It's too bad. So, you know, people might disagree with what I say, but I don't understand why you would. So here's the thing. If you want to get ahead, saving is smart, of course. The only way to truly get ahead financially in this country, United States, I'm assuming this applies to a lot of the world, you need to increase your net worth, and you need a high income. You need a high income one way or the other. You could have a business, you could have a job, and that's where you bring in a lot of money. Okay? The only other way to make a lot of money is through some kind of liquidity event. So maybe you owned a business and you sold it. Maybe you created an app and then you sell the app. That's a liquidity event where you sell something that was very valuable. The other way is you invest. Investing is the key for most people. I'm self-employed. It's the key for me. I tried to build things to sell. I've tried it. I'm still trying it. But for most people, you're going to need, if you want to get ahead, you're going to need a high income either through a business or a job, and then you're going to have to invest. Okay? Investing is the way to go. And the thing with investing is it only works when you allow the power of compounding to work. And it takes years. This is why it's hard to like truly get ahead and make money. You gotta buy stock. Maybe you buy index funds. You gotta buy equities and you got to hold them long term. It's just the only way. You have to hold it long term and let the power of compounding work its magic for you. And this is the unfortunate reality of life, and this is just like, see what I mean? Like, we're going to get to the car stuff, but this is how I explain it to my son. So, you don't like it? This unfortunately applies to a lot of things in life. It's like you get one chance, and if you screw up, that's it. And compounding is one of them. Every year you miss where you're not invested and you don't have money in, and you're not dollar cost averaging, you're adding more money, you're losing. You have more ground to cover, more ground to make up. You're going to get less of a benefit. Think back to like high school. So freshman year of high school, I don't know how it is in other countries, but in the United States, we do 9th, 10th, 11th, 12th grade. If in your freshman year of high school, you don't get straight A's, like just straight A's, and you're not doing extracurriculars, you basically have just written off Ivy League schools like it's over. You're done. There's no going back, there's no do-overs, that's it. Cooked. It sucks, but that's just the way it is. Because you're gonna lose out to the kid who got straight A's. There's kids who get straight A's all throughout high school, all throughout middle school and high school. I know one, my oldest friend, never got anything but an A in middle school and high school, did extracurricular activities, voila, went to Harvard. That's what you have to do. And I remember I had a teacher that told us that in high school too. He was like, listen, you get C's, you get C's even in the first quarter of freshman year. The second you get C's, that's it. Ivy League path is going for you. Done. Now, what they don't tell you is the same thing applies to investing. The cutoff, the absolute latest cutoff for investing is in your 30s. That's it. The ideal time is in your 20s. 20s, that's when you want to invest. If you don't get invested, the longer it takes for you to get invested, that's it, you're cooked. It's just how the math works out with compounding. All right. So, when it comes to paying cash for a car or financing a car, I would say, generally speaking, it's okay to pay cash for your first car and get something cheap. I recommend learning how to drive stick and get like a nice cheap stick car. Learn to drive on that, tear that thing up, okay? Learn what it's like to own a vehicle and take care of a vehicle and have a vehicle. But as soon as possible, you need to get your money up. Get a job, do something. I know it's hard with school, you know? I gotta be honest, if I could go back in time, I don't think I would go to college. I've made all my money self-employed, and so far I've made way more money self-employed than I ever would have with a job. I would have done fine with a job, but I've made way more by being self-employed. Like, no question. Absolutely no question. I've lived a much better life. And so I have the savings so I can invest. Okay? Pay cash for your first car if you want, and then as soon as possible get that money up. Look, you got to figure it out. I know it sucks to hear that, but like, that's just the way it is. You have to figure it out. The sooner you can get your money up and build savings, you need to invest it. And now we come to paying cash for a car or financing a car. Here's what people will not tell you. The interest rates are still low enough on cars that once you can afford a new car, even a lightly used car, it is smooth-brained as hell to pay cash for a car. Because the return you will get from investing will far exceed the interest that you will have to pay on the car loan. Regardless of if you finance or if you lease. Leasing is still financing, but We use different terms to make it easier, right? You need to get that money into the market as soon as possible. Now, people, this is where the programming is about to screw over a lot of people. When I tell you need to get your money in the market, what are you thinking? Oh, bro, it's a bubble. Oh, bro, there's gonna be a crash, bro. No, bro. I'm gonna put my money, I'm gonna lose it. No. That's the scam, man. That's how they keep people down. Whoa. I slowed down a little more than I had to, but it looked like a big enough roadkill that it might have hit the underneath the car. So and there was traffic coming, so I stopped all the way, so I could, if needed, I could just totally stop and wait for the traffic. There's nothing behind me either. Obviously, there's nothing behind me. Look where I am. Oh, bro, I'm gonna put my money. I'm gonna lose it, bro. Yo, the recession. There's gonna be a recession. Listen, man. All that talk is a scam. If you haven't had money in the market for like the past 5 years, let me give you a fact right now. If you haven't had money in the market for like the past 5 years, you have been financially cooked. Now, hopefully you're young enough where you can like get back in. Like, bro, this is how they scare people from investing and how it holds you back. Listen, maybe there will be some kind of crash, but here's the thing with all the crashes, it always goes right back up. It always goes back up. Let me tell you something. The rich run this country. They run the world. The stock market is the rich. The rich own the bulk of the stock market. They control everything. They control the Federal Reserve. Politicians are all rich. My guy, do you really think that the people in charge are going to let the stock market crash to like zero or something like that? It'll never happen. If it does happen, well, let's just say in the worst case scenario, the stock market totally crashed and never came back. The world is cooked anyway. The world is completely cooked anyway, and the least of your problems is that you had money in and it went down. Like, literally. You will have much bigger problems than that, let me tell you that. The stock market has gone down quite a bit this year, but it's already back up. So some people might have panic sold, but it's already back up. I have made 10% this year, just very casually trading on the side. And no, I'm not trying to sell my stock alerts. I'm not trying to be a stock guru. No, thank you. Listen, if 10,000 people were like, Sean, I'll buy your alerts for like $10, $20, $30 a month, boom, I would do it in a second. I would sell my alerts. Look, I don't benefit by making this up. I'm up 10% this year so far, even with the stock market downturn. Just trading on the side. It's easy. Trading and investing. It's not hard. It's really like not hard. You put a little effort in and learn it, and just make sure you hold long term. That's really what it comes down to. And if you don't know what to buy, just buy index funds. Just buy S&P. Bro, it's going to just keep going up. It's just going to keep going up. 5-10 years from now, you watch this video back, everything's going to be higher. And if you didn't invest, you fell behind. And that's why it's smooth-brained to pay cash for a car. As soon as possible, finance the car. Because the interest is just not that much. It's just not that much. Even at today's higher rates, the return you're going to get in the market is way higher. Way higher. And it compounds every year. It compounds. So every year you're not in, you're losing. What the hell? That was weird. Paying cash for a car is smooth brain. If you have enough cash to like pay cash for a car, like 15, 20, 25, 30,000, you could buy the car, or, oh, I got somebody passing up here. It's taking a while. Okay, they passed. You could pay cash for the car, or you could just put it in the market, or you could buy property. There's so many other things you can do with the money than put it in a car. A car is a depreciating asset. It's like literally the reverse of buying stocks and investing. Now let me show you the mistake I made. So I used to buy into the idea, paying cash for the car, don't pay interest. It's like, all right. I needed a car for my business. I used to sell coffee. So I chose a Toyota Sienna because that had enough room. And I could have got I was going to get a transit van, but then I looked at the Toyota Sienna and I was like, damn, like the Sienna has basically the same amount of space if you put all the seats down as the transit van, but it has all-wheel drive and it's not a commercial vehicle. So you can just drive it on any road. Commercial vehicles can't go on certain highways and stuff. So I was like, I'll get the Sienna, and it'll hold value too. It's a Toyota. Toyotas never go down in value, right? So I was so proud of myself. I walked into the dealer, like, so you financing? I was like, no, I'm paying cash, bro. I pay cash for my cars. What's up? Went to the bank, got a check, $14,500. Bought the car cash. I was like, yeah, I'm not paying interest. Yeah. Awesome. That was in like 2019. If I had just financed that car and just put, let's say I put like $2,000 or $3,000 down and just made payments, and I had just put that $10K in, I would have been able to put that $10,000 in the market and hold it. I could have put a little more than that. I had more savings than that. That's how I was able to pay cash for the car. If I had just put $10,000 into the market safely, I'm pretty sure it would be worth like $30,000, $40,000 right now. Even after the COVID temporary little dip. Like, I literally lost $40K by not just putting that money in the market. And I could have just financed the car. It would have been no difference. Interest rate, okay, I would have paid maybe $2,000 or $3,000 in interest. So, wow, I saved $2,000 or $3,000 on interest, but I lost $30,000 to $40,000 by not having the money in the market. And here's the thing, that 30, 40K right now, I believe the market's just going to keep going up. Like, that's just what's going to happen. That 30, 40K, like 5 years from now, may well be worth like 80. Could be worth 100 too. It's inflation forever. Look how much money I lost by not taking advantage of the power of compounding and paying cash for a car. Now here's the other kicker of what happened with this vehicle. So I bought it with like 120,000 miles on it. I was like, it's a Toyota, it'll go forever. I've also believed into the hype about Toyotas. The car made it to about 165,000 miles. We were driving on the highway one day, transmission blew, bro. Done. Cooked. I had to get the car towed. I had State Farm insurance at that time. By the way, if you're listening, get out of State Farm insurance. State Farm insurance is the worst insurance on the earth. Screw State Farm. You guys suck. You guys are the worst insurance. I had roadside assistance. They couldn't come get us. It was ridiculous. I had to call a tow truck company that was local, and there was just like nothing because I was in central Pennsylvania. I called the only tow truck company I could get because we were about an hour from home, and I needed the flatbed because this was the all-wheel drive Sienna. He was like, yeah, we can get it for $800. I was like, $800? He was like, yeah, that's it. I called 2 other tow truck companies. They're like, we could get you tomorrow. This happened at like 5 p.m. So I paid the $800. And this is also going to apply. I'm probably going to have to make a whole video on used cars in general nowadays, because used cars in general are pretty smooth brain to buy too. Just like generally speaking, unless you can get a really good one. New has all the best value. But I think that needs a whole other video. So I had the car towed, and I told my wife, I was like, don't even worry, like, I've done this before, I'll just find a junkyard transmission, we'll throw it in, no problem. So I started looking up parts. This was in 2022 when this went down. So after COVID, I look at all the junkyard transmissions, bro, they're all like $5,000, $6,000 with miles on them. 1 year limited warranty. I'm like, what the? Are you kidding me? Parts are out of control now, dude. A lot of y'all don't realize how expensive it is to get a car back on the road right now. parts are expensive. I've mentioned this in another video. It's like technology and the internet. The junkyards are smart. The junkyards used to not really be as smart. They used to get the cars for cheap. Everything wasn't digitalized. There wasn't enough data. So they practically gave parts away and they were able to make money. But now they have all the data and they sell everything online, right? It's just like how Airbnb has increased the cost of short-term rentals. When people have more data, they can charge more, basically. That's too long, didn't read. So now parts are expensive, even used parts. So I brought it to a local transmission shop. I was like, what do we do? Like, I would gladly pay you guys to put a junkyard transmission here. I can't find one. So like, we'll look for you. They found the best deal was straight from Toyota, a brand new transmission. With warranty, 1-year warranty. They're like, listen, the transmission from Toyota, we can get it for you. It'd be $4,000. And we need $1,500 to swap it in. I was like, that's a little high, but okay. And it's going to come with a 1-year warranty, $5,500. I was like, okay. Then he was like, oh, by the way, it's all-wheel drive, and your tires are a little uneven, which was true. The tires are not in great shape. They weren't like bald, but they were ready for new ones. He's like, listen, this is what we do. You have to put 4 new tires on this thing. I was like, yeah, here, I don't need 4 new tires. I looked it up myself. Yeah, no, you need 4 new tires on a new all-wheel drive transmission, dude. So that was another G right there. Then he was like, well, while you're in here, we can do the brakes. Your brakes are like cooked. I was like, yeah, it is time for brakes. So I did brakes. All said and done. And then I needed a rental car. They had the car for, it took like 2 weeks. That was the one thing with the transmission from Toyota. It took a while to get there, but it was just the best deal. The junkyard transmission was just way more for a transmission with mileage on it, and not as good as a warranty. All in all, I paid cash for all this, by the way, which is also, so it really sucked. All in all, it cost about 10K. About 10K between the tow, the rental, and the repairs. Now, looking back, I should have just junked the car. I won't lie, it was not smart to fix this car. I screwed up. I screwed up paying cash for the car, which I think caused me to screw up and put way too much money into it. I should have just told it out. Because here's what happened. I paid $14,500 for it, right? Now the transmission blows. So I'm like, oh, damn. My 14K is in this thing, this hunk of metal. If I scrap it, if I just give it up for parts, I'm going to lose like, what am I going to get for this? Like 5K, maybe? Because I'd had it for like 2-3 years by then. So it wasn't even really barely worth like 10, 11K at that point. It had depreciated. That's the thing. All cars depreciate. All cars depreciate, unless you find those super rare cars that don't depreciate. Anything mass produced is going to depreciate. So it's like, damn, I'm cooked. I put $14,500 cash into this, and now the tranny's blown. So if I don't fix this, I just part it out. What am I going to get parting it out? Selling it as a junk car? 5K? Maybe? Then I'll lose $9,000. So I was like, if I just junk it, I lose 9K. This is bad math, by the way. But this is like what I was thinking in the moment. I have a junked car. It was my only car at that time. I was like, all right, yeah, it's going to be almost 10K to fix it, but at least I get it back on the road, and I just have to drive it longer, and I'll get my money back. So I spent the 10K, and I put it back on the road. It's because I paid cash that I got stuck. Because all the cash was stuck in the car that is now a brick. You understand? If I had financed the car, let's say I put $2,000 down, something like that, and I financed the $12,500. At that point, it was 3 years. So I had it for 3 years, 2019 to 2022. I'm doing my best with the details. I'm driving. But it's fun. It's emergent gameplay. And this is real. It's authentic. There's no notes. There's nothing. Straight off the dome. After 3 years, I probably would have paid at least like $200-300 a month, something like that. So let's figure I would have paid off at least 6,000, 7,000 of it minus the interest. So I don't know what the payoff on the loan would have been. But the payoff on the loan would have been close. Probably would have been like 7K, maybe 8K, something like that. So in that scenario, I have a car that is junk. It's probably only worth like 5,000-6,000 if I part it out or sell it as a junk car, because they're worth like around 11, 12K. And I have an auto loan for like 8K. So in that scenario, I would have been like, okay, I'll just part it out, right? Or I'll sell it for junk. I think I could have got 5K for it, like after having looked it up at the time. I did think about it, but I ended up fixing it. I would have parted out the car, but now I'm upside down on the loan, right? So I still owe probably at least 3K. I'm doing these numbers off the top of my head. The exact numbers, these are not exact numbers, but I'm pretty sure it's about ballpark. But it proves the point, okay? Regardless of what the exact numbers would have been. Then I would have been upside down on the loan for 3K. I'd be like, damn, but just pay off the loan. 3,000, I take the 3,000 loss, and now I'm done. I still have, remember, I put 10K to put this thing back in the road. So just paying off the 3,000 loss on the loan would have been less. Now, granted, I would have made payments of like 6,000, okay? But that would have been the better option. And if I had the car finance, I think I would have done that instead. Because instead I put so much money into it, it was basically totaled. Like the car was only worth like 10, 11, 12K, and I put 10K into it. That's total. It's literally totaled. So I fixed a totaled car. And I think I made this stupid decision because again, I had that emotional attachment. It was just like out of nowhere, the transmission blew. I was like, what? This is Toyota. Even the transmission shop was like, yeah, we don't really see Toyotas all that often, especially this car. So I was like, damn, I don't want to lose all my money. It clouded my judgment. And after that, since then, that was it 2025? That was 3 years ago. That was like such a financial shock that like I was like, I need to learn more about money. I wasn't bad. I've never been bad with money. I've never missed a payment. I've always had a good credit score. I have like a low 800 now. I have savings. I've never been bad with money, but that one really was like, I need to like level up. And so I read a lot of books, studied a lot, and that's where I'm at today, where I'm like, wow, paying cash for that car was so stupid. It was that was a massive financial loss for me. Putting cash into the car, paying cash for the car was lost years of compounding, because I bought in 2019, so I lost 6 years of compounding. It would have been 6 years this year. 6 years of compounding, and then I put even more cash to fix it instead of just junking it. So remember how I said 10K would probably be worth 40K? So if I had put another 10K instead of repairing it, let's say 7K, because I would have had to pay for the car, and you still have all the payments I would have had to make, and then the loss on the loan most likely. Still would have been at least another 5K to put into the market. 3 years ago, if you put 5K into the market until now, that should be worth at least like 10, 12K. Okay, I didn't realize there was things there. I guess I gotta stay perfectly in the lines. You see like how much money I lost by paying cash? Now obviously part of it is that the car broke down. But even if the car didn't break down, even if the car stayed totally fine, it's still cash that was just sitting in there. It's better to pay the interest and put that money in the market instead and invest it. Buying used cars, here's the other issue, right? Like, what kind of car are most people going to be able to pay cash for? Something in like the 10 to 15K range is the max. How many people can save up $30,000 and pay cash for a car? Most people are not going to be able to do that, especially when you're young, And here's the point. Here's what I would tell my son. Listen, you need to get, I already said this, but I'm reiterating. You need to build savings and get that money into the market as soon as possible. You need every year of compounding. Now, to help protect that, oh, look, the little line actually comes over. It's not all me. Like, it actually was not even on the white in some parts. Now, here's the thing. The second you can make enough to afford a new car, here's why you go with the new car. This is something I've learned, and this is what rich people know already. You need that money to sit in the market as long as possible untouched. Part of trying to get ahead and keeping that money in the market, you need to avoid like random things that are gonna cause a shock that will cause you to sell. The worst thing that can happen to you is being forced to sell. That's why the rich, they never sell. They'll take out loans. If you didn't know this, like maybe you've heard this before, but it is true. What the rich will do is once they have enough stock, they never sell. You don't want to sell because the second you sell, you disrupt the compounding. What they'll do is once they have enough, they'll just take out loans and they'll just live off of the loans, and they secure the loans with the stock, with the equities. Because that little amount of interest that they got to pay is, you more than make it back up from the compounding. We're taught that interest is like this terrible thing. Generally, interest is bad. It is generally a poor tax, but if you understand how it works properly, interest is just the cost of working with the banks to get you ahead. Okay? Now, I might have to make a whole video on this, but when you do the numbers, look at all the headache I had with this used car. I bought a used car for $14,000. Toyota, supposed to be reliable, and it broke. Anytime you buy anything used, most cars in like the 10 to 15K range, they have very high mileage and they're old. They're gonna break at some point. That's why they're used and they're for sale, because someone else got out of it. They're smart and they're like, let me get rid of this thing before it starts costing me money. When you go with a new car or very lately used car, it costs more up front. You need the income, you need good credit to be able to get the car at a good interest rate. You need the money to get the car. But if you can get the car, you're saving yourself from shock events. So I leased this car and I leased my other car. I'm going to make a video on why I like leasing. Leasing helps you get ahead. That's another trick the rich use, and I see why now. I lease all my cars now. When you have a steady payment and you have a car under warranty, newer car is less likely to break down and have that shock event. When you have a used car and it breaks, that's like a shock event, because nowadays it's so expensive to fix them. And any number of things could go wrong. The transmission can blow, the engine can blow, could have some weird exhaust problem, some unique problem with the car, and it could cause you to go into your pocket and potentially have to sell stocks. Maybe you're just starting out and you're just in your 20s and you only can buy 10,000 of stock right now or 5,000 of stock. That's okay. That's good. That's a good start. You just got to get started. But if you get a used car and you put like 5,000-10,000 into the market and then that used car breaks, you're still trying to build your stack. What's going to happen? You're going to have to sell the stock, man, when you could have just bought the new car. Now, I'll try to make a whole video on this, but when you get the new car, when you do the math, okay, try this yourself. Now, this requires that you have good credit and that your insurance is not out of control. So look, you gotta figure those out. The sooner you can start financing cars, build your credit up a little bit, you can start buying these new cars. New cars, when you do the math, they really don't cost more than used cars. That's the secret, bro. Unless you buy something super cheap, new cars cost, just from a dollar perspective, it's very close to a used car in the end. This is another thing I've only learned from doing books. This is why I do leases. When you actually work the math out, people are not good at working the math out. When you work the math out, that new car, and this is why rich people keep buying new cars. You gotta understand, there's rich people out there who are so cheap. Like, if it made more financial sense to just buy used cars, they would. It generally makes more sense to buy a new car. And there's multiple reasons why. One big one right now today, the interest rates are lower on the new cars than used cars. That's like a big one right there. So you will you'll pay less interest on the new car. They have new car finance deals. Some of them are like 1%. You basically can pay no interest on a new car. So if you have good enough credit, and you have the income, you can get a new car right now and you don't even have to pay interest on it. Like, literally, it'd be like 1% interest. You could just take the extra money, right? All that money that you would have spent interest and everything, and you could just buy CDs. You could buy like 100% safe stuff and make money right there. Another reason why it's smooth brain to pay cash. But do this for yourself. Watch. Price out a new car, brand new, let's say a $30,000 car. I did this today. Every time I check, it's always true. So I checked out new BRZs and GR86, or is it GT86? The 86, the Toyota Coupe. I love those cars. I love both. I would love to have either of them. I'm almost tempted to get one after the numbers I check. You can get a new 86 or BRZ right now. They're on sale. They're taking $1,000 off MSRP. They're like 32K, 33K. The cheapest I saw was 31K. 0 mileage, brand new car. A used one, I always check over 5 years. That's a general good rule of thumb, because that's how long you'd probably finance your car, right? So I checked 5-year-old 86s and BRZs. What I found is they were mostly going for like 22 to 24K, but they got like 50,000 miles on them. So you're really only getting like a $6,000, $7,000, $8,000 discount, like max. But you're getting a 5-year-old car that you know was beat on. You know it was beat on. And it's got 40, 50, 60,000 miles. Those are the cars I saw. I checked nationwide. Now what I did is I looked up 10-year-old BRZ 86. So I could do a comparison between buying new, 5 years old, 10 years old. The ones that are 10 years old, bro, you can't even find one that has like less than 80,000 miles. It's very difficult. They all got like 80, 100,000 miles because they're 10-year-old cars and they've been driven. And they want like around 11,000, I saw. 11,000. Now, work all these numbers out. The cost over 5 years to buy the brand new car, you're gonna pay out with the average interest rate nowadays. I saw it was about like $39,000, $40,000, something like that. It's like $600 a month, I believe, over 5 years. It was like about $300 a month that it ends up costing if you give the car back. So all my numbers, I work my numbers out as if you were going to give the car back. If you're going to drive it long term, then okay, whatever. It's a little different. I'm having trouble remembering the numbers because it's complicated. I'm dropping info in this video. New car, total cost over 5 years, because you do a 5-year loan, you pay off the whole thing. It was about $40K. Now, at the end of the 5 years, let's say you want to get out of the car. The car is probably going to be worth about $20K on the trade based off of the resale values I see the dealers selling the other cars for. I think you'd actually get $20K on the trade, because some of these dealers are charging like $25, $26 for a 5-year-old one. So they'll give you $20K. They can turn that around pretty fast. Maybe $19K, but I think $20K is fair. But even at $19K, so you paid about $40, you're going to get back about $20. When you work out that cost over 5 years, it works out to about $320 a month to drive the brand new car for 5 years and then give it back. Do this same calculation on a used one. Let's say you bought one of the used ones for like 24, 23 even. I'll even be generous, but in my numbers I was like, let me say you got a deal. Let's say you got 22.5. You buy a 5-year-old one. You're like, oh, I'm gonna save money and I'm gonna buy the used one. you're going to have to finance it because it's like 23, 24K. Remember, you need to put that money in the market. That used one, after 5 years, we already know what it's going to be worth. It's barely going to be worth 10K. 10K, worth 10K. In reality, on a car that old, when you go to trade it in, they're barely going to give you like $5,000, $6,000 if you're lucky. 10-year-old car with like over 100,000 miles. No, if people are barely trying to get like 10 to 11K for a 10-year-old BRZ with like 100K miles, which is probably what you'll have after 10 years, if you even drive a normal amount. Even if you drive under, they're gonna wreck you on the trade. Now you could try to sell it privately, and here's an important point I have to make. Selling cars is extremely difficult. Listen, if you think you can sell your car privately and you think you're good at that, then open a car dealer. What do you know that the experts don't? The people who do this all day. You don't. It's very hard to sell cars. Dude, look like just the BRZs I looked up. There's dozens and dozens and dozens of used ones for sale. Here's the thing, most people prefer to buy from the dealer. Why? Because they need financing. Most people need financing regardless. They can't save up for the car. If they're gonna buy it private from you to finance it, they'd have to go to their bank, get a private auto loan, and the bank's like, what car is that? They're like, I don't know, I'm just trying to look for. People take the path of least resistance. They're just gonna go to the dealer and buy the car. It is incredibly hard to sell a car privately unless it's like dirt cheap. Like we're talking like well under 10K. Then you can maybe sell the car, maybe. Even then, it's very hard. You're gonna have to deal with a lot of tire kickers. It could take months to sell, if not years. So if you buy the used one instead of the new one, when you work the numbers out on a realistic trade that you're gonna get, it comes out to about $300 a month when you do the numbers. Is it cheaper than the new car? Yes, but only slightly. And the thing with the 5-year-old one that you bought, it has no warranty anymore because it's past the 5 years. It probably doesn't have a warranty anymore. So anything that goes wrong, you are on the hook for. It's going to need all sorts of maintenance too as it gets to 100,000 miles. So just assuming no repairs whatsoever, it's already close to the new car. It's already close. It's already like right there. The second you have any like maintenance or any repair or anything, boom, the used car costs more than the new car. And that's exactly what happened to me with the Sienna. Now my case was extreme because the transmission blew. But even if the transmission didn't blew, it still needed brakes. It still was going to need tires. It still like needed stuff, and it had issues too. It was starting to get to be an old car. It was like a 2014. Even without the transmission, if I had literally just leased a brand new one or financed a new one, the price would have been like vaguely similar. New cars all day. What has happened is in the past, see, people are operating on old software. In the past, you used to get a really good deal on used cars. Basically, like the risk was built into the price. The fact that the transmission might break, the fact that the engine might break. So they were like 20, 30, 40% cheaper than they are today. The prices are now priced as if this car is not going to break ever. At the same time, new car prices have not appreciated as much. They're doing discounts on new cars. And the reason is because a lot of people just can't afford a new car. So if you can get your money up and you can afford a new car, you benefit a lot because you're getting a better deal on a new car. And that's why I lease, because I've built my money up enough, my wife and I, we share everything, to the point that the new car makes more financial sense, the lease makes more financial sense. And this doesn't even get into the fact that when you have a lease, you can deduct. We don't even have to get into all that. That's for another video. It's not worth it to buy used cars. It's just, generally speaking, like it's, unless it's something specialty that you really want, like you want some, like a Porsche or something, like right now for your primary vehicles, new is the way to go. You get a better deal on new. Now, of course, it requires that you have a certain amount of income so you can get approved for the loan, and you want the lower interest rate, because if you have to pay a high interest rate, it's not worth it. Then it becomes less comparable. Let me take a sip of water. Made mad videos for you guys today. All these people who are like, buy cash, now I feel I have financial freedom and I have my car. Those people, they must be living at home because, dude, living in the real world, you have so many other expenses. Like, the car isn't even... Dude, most people nowadays are spending more on groceries than the car. It is very hard to keep your groceries below, like, $500 a person nowadays per month. Like, that is difficult. If that sounds crazy to you, then you must not be paying for groceries. Oh, bro, I'll just eat beans and rice, and I'll never go out and eat takeout ever. Okay, sure. In the real world, you're going to be getting takeout multiple times a month. You're going to get takeout. Stop it. Don't lie and be like, I never get takeout. Stop lying. You're lying. Why are all the drive-thrus always busy? Everywhere you go, there's always people in there. You're going to get takeout. It's okay. And people are spending a lot on groceries because groceries are insanely expensive. Homes are insanely expensive. Everything is expensive, which is why you need to get your money up, make more money, and invest. So I believe heavily in saving. Save as much as possible. My point is, you're trying to save on the car, it just doesn't work. Buy new. New's the way to go. Lease. We'll make a whole video on that. I think I'll click this off and I'll do, maybe I'll do leases. I'll do another day. I already made enough videos today. This is all the stuff I would tell my son. And it's a little grim, but in some ways, like, something could always happen to me. I don't know. So I do make these videos, like, if something happened to me, at least there's the videos up and you can watch that. You know? Like I said, grim, but it's just reality. Your first car can be cash. That's okay. But as soon as possible, buy something new, if you can. And finance. Do not pay cash for your cars. You're going to lose so much time on your compounding. It's not a wise financial decision. It's just not. You're never going to get ahead. And again, the reason is because, I'll just sum it up. When you pay cash for a car, the only cost that you're saving is the interest. That's it. You're just saving on the interest. But the interest is just not that high. The cost of the interest is way cheaper than what you can do with the money by investing and putting the money to work for you. That's what it is. That's what it is. It's that simple. So paying cash is smooth brain. If you're at the bottom, like you only have like $5,000 for a car, okay, and you're not really able to save, then yeah. But that's like, you know, listen, there's no universal advice, you know? All right, I hope that covers everything. Let me know in the comments if you enjoyed. That's all I got for now, so I'll see you guys in the next one.